Hello, everyone. This is Jason with Levelhead Trading, giving you my technical analysis on Tesla today. It's been several days since I made my last Tesla video. The first thing I want to point out is what I mentioned before in the very beginning of my last video was the most important thing is the higher lows. As long as you're holding higher lows, then everything is going well. So we obviously broke that and pulled extremely far. Did not want to pull this far back. So that's not a very good sign at all. So this was what I was talking about in my last video. These were the higher lows, starting with the low and then creating a higher low, having the trend change on the daily chart, continuing here. And then this is where you stalled out right here. And where you stalled out at was right at this key area here, which was the 38.2 retracement, which was the first level that I thought we should get to, and hoping that we would continue further and have a bigger retracement, reaching all the way up to the 200-day moving average. So that is not looking like it's going to happen. So in the bigger picture now, I've expanded to one more time frame, and I'll get into that at towards the end of my video. So again, it's very important to continue holding the higher lows. It's not as important the highs that you get, as long as every time you pull back, you create a higher low from the previous one. That is continuing the uptrend. So we did not continue the uptrend, and we are at the very bottom of where the daily trend change happened. So what do you make of that? Like, how do you analyze when you have such a big pullback? Well, then what you do is you look at the weekly chart. So the next bigger time frame, and I mentioned this once before, is if we only retrace 38.2, then that will be a bear flag on the weekly chart, because you have to continue the daily uptrend in order to create enough space in order to create a weekly higher low at some point. So if we were to get up into this area, then if we were to pull back down into here, then that would be healthy to create your weekly higher low. But we couldn't even get to that point because we lost the daily uptrend clearly. So now, again, the key resistance now that is hard rejection resistance is right up here in the 205 $206 range, which is the very bottom of this right here. So this is a clear level that is rejecting. So now going on to the weekly chart, this is now how the weekly has turned into a weekly bear flag. So the weekly bear flag is, again, you come from here and you drop all the way to here. So when you look at the space that you fell, the only amount that you were able to regain was approximately 38.2%, which would then constitute a bear flag on the weekly chart. So I'm going to take this line out because we don't need that anymore. It's no longer relevant. And now, as you can see, this at the moment is a weekly bear flag. So the only thing left is to hold this 175.01. That was the low. And we're knocking on the door of that. Today we got down to 177.57. So we got within $2.50 of the low. So if we can't hold this low, then we have to look at the next area of potential support. So if this bear flag breaks below the 175.01, and make a note, we're only 2 days into the week. So this is the weekly candle, and this is only 2 days into the week, and we're already close to breaking that 175. So I drew the low and the high. So here's the range from here to here. So we're trying to hold on to that. And if we can't hold on to that, then the next key level is the 150, 152.37. I think on some other time frame it comes up as around 150, 151, but I might be mistaken. But anyway, you can clearly see this weekly candle, because we are looking at the weekly chart right here, where you have the doji, and you pulled right back up, and then you had the engulfing candle, and then you continued up. But again, make a note: you did not create a higher weekly low and then a higher weekly high. This was a lower weekly high and then a lower weekly low, a lower high and a lower low. So that's the next area, 152. In between here and there, if I go back on the daily chart, there's a little gap area, which I'm also looking at as maybe this will be the spot now that we go back and fill. And that comes down back in here. Let me see if I can find it. I mean, it actually was filled, but if you notice, going back here, so I'll give you the dates on this. This was, it was this year. It was, I'm sorry, this year. This was April 19th, this candle of 2023. So almost a year ago. And then this was the gap down April 20th. So the 19th and the 20th. So between there and there, this gap is 169 to 177. And that's right where we are. That's the low that we reached today, 177 something. So there's a gap area. Yes, it got filled right in here. And that was it. That was just that one time it stayed in this area and then it took off. So here's the current price right here on this line above. And again, so it looks like we want to initially get down into this area now. I don't think that 175.01 is going to hold. And the other point that I'm going to make now about what's going on in the overall market, right? So I was curious. I knew the overall market was very, very overbought. And I was curious if Tesla was going to then be where money went to coming out of the areas that had run up so strongly recently. So this is QQQ, which a lot of times it's correlated evenly with Tesla. But now Tesla's divergence is a huge difference from where QQQ is now. So this is, let me see, am I on the daily charts here or the weekly? Just a minute. Yeah, this is the weekly chart of QQQ. So we're up at the highs and we're about to, or we already have broken the low of the previous week, which was 434, and we got down to 433.65. So again, 2 days into the week. And what I was curious about was, with all the things in here that ran up, like Meta, like Nvidia, Amazon, Apple's kind of in the middle because Apple has pulled back about 15%. But those other ones, they've been running and running and running while Tesla's coming down. So I was curious as to when this QQQ and the other things started coming down, was money going to rotate and go into Tesla, which was already beaten up? So like a laggard play. But it doesn't look like that's happening. So the market's weak, starting to get weak, and Tesla is reacting very poorly to the market pulling back. So what that tells me is that Tesla most likely is going to be going lower and lower. So again, 150 is the next key level right there. And what I'm going to bring up now, one last thing is, notice how on the weekly chart, how you had the rejection off the 12 period exponential line. So you see that right there. You kind of reached up and you just barely got close to it. You didn't even touch it, but you got pretty close to touching it. And then you have the hammer rejection. And that just took 2 days to play out to get down this far. So on the weekly chart and on the monthly, this is lining up here at 152.37. Now I'm going to go into the next biggest time frame, not the monthly, but the 2-week chart, because I find this, or maybe, I'm sorry, I'm on the 2-week chart. All right, let me show you the difference. So on the weekly chart, you see here, last week we got up right up to that 12-period exponential, and then we have the hard pullback. Okay, so that's the weekly chart. There's the 200-week moving average up there at 223 approximately. So we can't get over 205. So the 223 looks like it's out of the question anytime in the near future. So here's the RSI on the weekly chart. It's 37.95. We're coming off of 70 on the RSI on the weekly chart when we got up into this area here, the most recent highs of 299. So as I say, if you get it to 70 on a strong trend, then at some point you're probably going to get down to 30. So you got up to 70 and we did not get down to 30 on the weekly chart. So if we were to reach 30 on the weekly chart, assuming this will be a bear flag and it'll play out, and I can kind of estimate by the range of 205 and 175. That's a $30 range from here to here. So if I take $30 off from the low, because that's generally what the move would be, if you break out of this range, it'll be approximately $30, in my opinion, to the downside, which would bring it to 145, which would get it a little bit under that 150. Now, that will take time, most likely. And now jumping again, so that's the 200-week moving average. So now, since that looks like it's out of the question, I decided to look at the 200-week moving average and see what it looks like. So here's the 200-week moving average. So these are 2 weeks at a time. And based on it breaking out, if it does break below that 175 convincingly, then next area is going to be that 152, potentially push underneath that, and then come down to the 200-week moving average. And notice when Tesla really took its dive right back here where it got down to $101, there's where the 200-week moving average. So it landed right above the 200-week moving average. So if we get oversold on the weekly chart, getting down to the 30s, that should bring us down to this 150 area. And if that takes weeks and weeks to play out, the 200-week moving average will slowly, just like I drew my lines on different trend lines, if I extend this out, this is slanting slightly up. And if weeks and weeks and maybe months play out, this will gradually get up near 140, 145, depending on how much time this takes to play out and find the next bottom. So that's what I'm seeing now. So my game plan, I had added some more Tesla right down in these areas here. And I don't want to sell it all, even if we break the 175, because I'm not heavily invested. I wanted to add more. I have added more. But now what I'm going to do is if we break this 175, I'm going to sell probably a third to half of what I currently own of Tesla. And then I will not rebuy until we get some clarity, or if we get down and start testing this $150 level and we get oversold on the weekly chart. So that's my analysis on Tesla. If you like what you see and you're not subscribed, please come join, click that subscriber button wherever it is, and become part of this. Appreciate your time. Thank you.